Hello, good afternoon, guys.
Good afternoon, sir.
Good
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 afternoon.
afternoon, sir.
Good afternoon. Okay, let's go over directly to final income taxation. So we can finish the topic. Okay, so for final income taxation, um, I'll be discussing the features of final income taxation. No? So what is final tax? Or final taxation? It's a final tax. It's tax withholding at source, and it has territorial imposition. It applies only to certain passive income earned from sources within the Philippines. So, ibig sabihin, it's not everything na you earn in the Philippines or within the jurisdiction of the Philippine sovereignty will be taxed under the final income tax. So, meron lang to mga items which are under the final taxation scheme. So, all income abroad, active or passive, are subject to regular income tax. And it's for the convenience of the taxpayer and the government. Later on, you will realize why. And final income tax is imposed on certain passive income and to non resident persons not engaged in business in the Philippines. So, final withholding tax or FWT on passive income. These are applicable only to passive income from sources within the Philippines. Okay, passive incomes derived from outside of the Philippines are subject to income tax under Section 24A of the Tax Code, meaning under the gross income scheme less all the allowable deductions, which will also be subjected to if an individual regular income tax table. Okay, for it is a tax deducted from the income to be paid to the payee or the seller. It is constituted as full and final payment of income tax liability. Hence, the income tax subjected to this tax is no longer included in the income tax return of the individual taxpayer subject to basic income tax under Section 24A of the Tax Code. Pag sinasabi natin na Section 24A of the Tax Code, ibig sabihin yan, sinasama mo siya dun sa gross income. So pagka sinabi natin na it is already under the final withholding tax scheme, hindi na po siya sinasama as part of the gross income because it has already been taxed. Ayaw natin ng double taxation, di ba? So, when it is already subjected to final withholding tax, from the term itself final, that is the final tax. So, ibig sabihin, hindi na po siya itatax ulit when you compute your annual gross income and taxable income and tax due for the year or for the quarter for purposes of filing your return. Okay, so madalas ito pagka na-subject na siya sa final withholding tax, excluded na po talaga siya sa computation ng taxable income which is under Section 24A of the Tax Code. Ang tax code na tinutukoy natin dito again is the National Internal Revenue Code. Okay? It cannot be credited or deducted against the basic income tax due. So iba po ito sa creditable withholding tax. Later on, malalaman mo rin na meron tayong tinatawag na creditable withholding tax, which is the 2307, yung form. So hindi po ito, iba po ito. Okay, the final withholding tax is not deductible on basic income tax due for the reason that the income that was taxed under final withholding tax is also not included as part of the gross income. The liability of the for the payment of the tax is primarily on the payer as the withholding agent. So kapag po ang income daw ay subjected to final withholding tax, it lodges upon the withholding agent ang burden ng talagang pag-withhold nito at yung pag-remit to the BIR ng tax liability. Kasi sabi dito, under the provisions for final withholding taxes, na dapat kung ikaw yung nagbayad dun sa person who earns the income which was subjected to final withholding tax is required as the entity na nagbabayad, yung payer, to withhold from the payee the final withholding tax. At ikaw din yung required na pag nag-withhold ka, i-remit mo din siya sa BIR. You will then transfer the funds to the BIR's account. Okay, so that's final withholding tax. Okay. So, Kaya sinabi natin kanina, these are only on certain passive income of individual citizens and resident alien or only on certain passive income kasi hindi naman lahat. So pag sinabi nating final tax, ito po yung mga passive income that will be subjected to different types of final taxes. So number one, interest income, currency, interest income from currency deposits. So okay. So, on certain passive income of individual citizens and resident aliens, again, interest income from currency deposits, trust funds, and deposit substitutes, 20% ang rate dyan. Okay, so you will also see this if you have a bank account, makikita mo yan sa passbook mo, na bakit may interest income ako tapos may nababawas ding maliit na amount. That's because of the 20% tax rate of the final tax. Automatic na wini-withhold ni bank. Because si bank is the withholding agent. Siya yung required na mag-withhold. Pag sinabi natin mag-withhold, babawasan niya yung ibibayad niya sa'yo by that percentage, okay, as the withholding agent. Ang liability niya ngayon is to pay it or remit it to the PIR. Okay? So, for another item is royalty or royalties on books as well as literary and musical compositions. Okay? So, that's 10%, in general 20%. Kapag po literary and musical composition, that's only 10%. But all other royalties, 20% po ang rate dyan. For prices, okay, may mga papremyo that you won, 10,000 or less, undergraduated income tax rate, ibig sabihin, isasama mo na lang siya dun sa gross income mo for purposes of computing your income tax. But if it exceeds 10,000, it's going to be 20%. Okay. For winnings, except from PCSO and Lotto amounting to 10,000 pesos or less, that's 20%. From PCSO and Lotto amounting to 10,000 yan, exempt yan ha, kapag po more than 20%, okay? Interest income from a depository bank under the expanded foreign currency deposit system. Foreign currency, ibig sabihin yung mga dollar, euro, or whatever foreign currency you have in the depository bank, it's 15% on the interest income. Cash and or dividends received by an individual from a domestic corporation, joint stock company, insurance, or mutual companies, that's going to be 10%. The share of an individual in distributable net income after tax of a partnership. So, ibig sabihin po, meron silang partnership, and if it's a partnership, meron pong hatian sa profit. Yung hatian nila sa profit is tinatawag natin na distributable net income of the partner. Yung distributable net income of the partner after tax of a partnership is 10% ang rate natin dyan. Okay? Okay? That includes those under association, joint account, joint venture, or consortium which were taxable as corporation of which he is a member or co-venture. Capital gains from sale, exchange, or other disposition of real property located in the Philippines, classified as capital asset. Ang tax natin dyan, final tax would be 6%. Okay, another is going to be net capital gains from sale of shares of stock not traded in the stock exchange. It's 15%. Okay. Interest income from long-term deposit or investment in the form of savings. Kapag long-term, it's exempt. Okay. Upon pre-termination before the 5th year, there should be imposed on the entire income of the proceeds of long-term deposit based on the remaining maturity thereof. So, pag long-term, exempt siya. Pero if it's less than 5 years, ang long term tinatawag natin na long term kapag nag-beyond siya ng 5 years. So kung hindi siya nag-beyond ng 5 years, hindi yun pala long term. So if it's 4 years to less than 5 years, that's 5%. Mas mababa po yung holding period ng investment mo, mas malaki po yung tax rate. So if it's 3 years to less than 4 years, that's 12%. If it's less than 3 years, 20% po yung tax natin. Ang isa sa mga reasons na makikita mo dyan is really that This is about this is the Bangko Sentral, no, related to the Bangko Sentral. This is about your um, long-term deposit. So this is a way of the government to incentivize or encourage you to really do some investments or hold your investments for quite some time. But again, if circumstances come and you need your investments cashed out, you will be taxed, okay, for the income, and it's going to be a higher tax. Less than 3 years, that's 20%. If it's 3 years to less than 4 years, that's going to be 12%. And if it's 4 years to less than 5 years, it's 5%. If it's more than 5 years po pala, exempt, yes. Kaya, kasi nag-qualify na siya as long-term investment. Okay? How about naman po, yung tinatawag mo kanina na for non-resident aliens not engaged in trade or business. So kapag not engaged in trade or business, usually yan sila, hindi naman siya regular na nagkumikita dito sa Philippines kasi nga na-classify siya as not engaged in trade or business. At remember in the previous discussion that we had, meaning one of the reasons na na-classify siya as not engaged in trade or business because he did not stay more than 180 days here in the Philippines. So yung tax rate in general on taxable income from all sources within the Philippines ng isang non-resident alien not engaged in trade or business is in the same manner as individual citizen and resident alien, no? So, on passive income, yung tax rates niya, depende, okay, sa item. Kung interest income, it's going to be 20%. Kung royalties, on literary, almost the same, di ba? 10% at saka 20% in general. Prizes, graduated income tax rates, over 10,000, 20%. Winnings, so familiar, almost the same yun sa mga final taxes. Kaya natin sinasabi dito, in the same manner as an individual citizen and resident alien individual. Kasi kung mapapansin mo, even if non-resident alien not engaged in trade or business siya, yung mga tax rates niya almost the same as that of dito, individual citizens and resident alien. So again, by now, gusto ko lang po talaga i-remind kayo that you will have to know the difference between these entities or types of taxpayer, no? Kasi nasabi natin individual citizens or and resident aliens, no? So, for non-resident aliens, almost the same makikita mo yung mga tax rates niya from the passive income. Okay? Ganun pa rin for long-term investments, 5, 12, 20. Okay? For capital from sale or exchange, classified as capital asset, ganun din, 6%. Capital gains, if not more than 100,000, 5%. Any amount in excess of 100,000 will be 10%. Kapag sale of shares of stock not traded in stock exchange. Okay, for alien individuals employed by RHQ or RO or regional operating headquarters or multinational companies, offshore banking units, petroleum service contractor and subcontractor, on their gross income consisting of salaries, wages, annuities, compensation, remuneration, and other emoluments such as honoraria and emoluments derived from the Philippines, is going to be under the graduated income tax rates. Okay? So, for domestic corporations naman, ito yung taxability nila. For interest income, it's the same as the individual. No, makikita mo, it's also 20%. Royalties from sources within the Philippines, wala siyang qualification, it's going to be 20%. For interest income in the depository bank, it's 15%. Cash and property dividends received, wala, 0. Capital gains from sale or exchange of disposition of lands and buildings, 6%. And net capital gains from sale of shares of stock not traded in the stock exchange is 15%. So ito nag-differ ng konti, no, sa net capital gains from sale of shares of stock not traded in the Philippines. So makikita mo dito, ito if not less than 100 if not more than 100,000, 5% siya. If more than 100,000, it's 10%. Pero if you will see here for corporations, it's going to be 15% if it's not traded in the stock exchange. Okay. So for resident foreign corporation, ito naman yung mga tax rate niya. Makikita mo in general, yung makikita mo pala dito, meron siya taxation on minimum corporate income tax, which is on gross income of 2%. But I think under the CREATE law, you may be able to avail of the lower rate of, I think, 1% already. If you qualify under the qualifications, and improperly accumulated earnings tax, of course, is 10%. In general, corporations are taxable at 30%. International carriers on Philippine gross billings, that's going to be 2.5%. Regional operating headquarters or multinational companies is going to be 10%. And regional or area headquarters of multinational companies is exempt. Corporation covered by special laws, the rate specified under the respective special laws. Kung meron siyang special law, ipa-follow natin yung rate doon sa special law na nag-govern dun sa um, corporation na yun or sa operations ng corporation na yun. Okay? Offshore banking units is going to be 10% yung income. Okay? In general, if income derived by OBUs from foreign currency transactions with non-residents, exempt. Okay? From local commercial banks and branches of other foreign bank authorized by BSP. On interest income derived from foreign currency loans granted to residents other than offshore banking units, it's 10%. Income derived under the expanded foreign currency deposit system, it's 7.5% for under the expanded foreign currency deposit system. Yung interest on income derived by depository banks under the foreign currency deposit systems from foreign currency transactions with non-residents, OBUs in the Philippines, it's exempt. On interest income derived from foreign currency loans granted by depository banks under the FCDS to residents under the other than offshore banking units, it's 10%. Okay? For branch profit remittances, kapag nagpapadala na sila ng kita nila, a portion of their income from the Philippines to their head office, that's going to be 15%. Okay? Except those, of course, activities which are registered under PEZA. Kasi may ibang provisions yon sa exemptions ng PEZA. May mga tax holidays sila. Interest from foreign currency deposits, trust funds, deposit substitutes, and similar arrangements is going to be 20%. And royalties derived from sources within the Philippines is also going to be 20%, walang qualification. Okay? So for final withholding taxes, you have 0619F, monthly remittance form for final income taxes withheld. You also have 1601FQ, quarterly remittance of return for final income taxes withheld. 1602Q for quarterly remittance return of final income taxes withheld on interest paid on deposits and yield on deposit substitutes, trusts, etc. Okay, we have also 1603 for quarterly remittance return of final income taxes withheld on fringe benefits paid to employees other than rank and file. You will later on learn about fringe benefits. And 1604F will be annual information return of income payments subjected to final withholding taxes. For 2306, we have certificate of final tax withheld at source. Okay. So, ito pala, makikita mo to sa forms. I will just show this on the screen, pero if you will search on Google yung forms, makikita mo rin yung mga rulings dito doon sa form, no? At ito yung revenue regulation number 26-002002 will be the deadlines. It depends on whether you're from group A, B, C, D, and E. Your deadlines will be every 15 days, 14 days, 13 days, 12 days, 11 days, depending on your group or classification. Okay? Manual filers, they shall be filed and the tax remitted on or before the 10th day following the month, okay, in which withholding was made. Pagka EFPS filer, yung naka-electronic filing and payment system siya, naka-set up siya under RR 26-2002, ito yung mga deadlines niya. Okay? For 1601FQ, this is quarterly tax remittance. So this quarterly tax remittance return shall be filed and the tax paid remitted not later than the last day of the month following the close of the quarter during which withholding was made. Ibig sabihin, the next month after the end of the quarter. 1602 quarterly remittance return of final income taxes withheld on interest paid on deposits and yield on deposit substitutes, trusts, etc. This quarterly return shall be filed in triplicate. Okay, filing date. Okay, not later than the last day of the month following the close of the quarter pa rin. Okay, 16013 again, 1603, this is for fringe benefits, no? And we will later discuss about fringe benefits in detail. But this is also due and should be filed not later than the last day of the month following the close of the quarter as well. Okay, of course, 1604F is going to be the summary annual information return of income payments subjected to final withholding taxes. January 31 yan. Okay, 2306, Certificate of Final Withholding Tax at Source. To be issued to payee on or before January 31 of the year. Okay. Capital gains tax. Ano naman to, sir? Is it also final tax? So, yung whatever you gain or earned under for properties that you have conveyed or transferred for exchange of consideration where you earned something will be under capital gains tax because it's classified as capital asset. So that earnings from capital assets will be under capital gains tax and it will already be excluded from the gross income for purposes of computing your income tax payable because it has already been subjected to capital gains tax. So in a way, it is a form of final tax. So capital gains tax is a tax imposed on the gains presumed to have been realized by the seller from the sale, exchange, or other disposition of capital assets located in the Philippines, including pacto de retro sales and other forms of conditional sale. Okay? So, para maintindihan mo yung capital gains tax, you should already be able to identify which would be the ordinary asset and capital asset. So, pag sinabi natin na ordinary asset, it's a stock in trade. It's either a stock in trade or other real property included in the inventory. It could be real property primarily for sale. It could be a real property used in trade or business subject to depreciation. Yung mga PPEs mo is an ordinary asset. Real property used in trade or business. How about capital asset? Ano namang nandun? So, any asset not classified as ordinary, if you will notice, yung ordinary assets is defined and has given an example. If it does not belong to an ordinary asset based on this, then it's going to be a capital asset. So, it is a residual definition of an ordinary asset, yung capital asset. Any asset not classified as ordinary will be called as capital asset. So, personal or non-business property, asset held merely for investments, and property not used in business is going to be a capital asset. Okay, and conveyance of any transfer thereof will be subjected to capital gains tax. So asset classification is relative. It depends upon the nature of the business. For example of land, okay? Parcel of land, ordinary asset to a realty dealer and capital asset to not engage in real estate business. Siyempre kasi si realty dealer, madalas ang mga inventory niya would be land, okay? Or mga real properties. Because he's buying and selling properties, real estate. But if you're not in real estate and you have that land and it's not used in business, it could be classified as capital asset. That's why sinasabi niya, it depends on the nature of the business. It is relative. Okay? Asset classification rule for future use in business is going to be ordinary. Discontinuance of use in business, it's going to be ordinary. Fully depreciated asset, it's ordinary asset. Real properties of exemption corporations, it's going to be capital assets. Ordinary assets are automatically converted to capital assets if the taxpayer not engaged in real estate business can show proof that it is not used in business for more than 2 years. Involuntary transfer, that is expropriation, has no effect on classification. Not engaged in business, capital asset. Kung hindi talaga siya ginagamit sa negosyo, it's going to be capital asset classification niya. So what are the types of gains? You have the ordinary gain, which arises from the sale, exchange, and other disposition, including pacto de retro sales and other conditional sales of ordinary assets. Obvious ba, di ba? Pagka sinabi naman pala natin capital gains, it's going to arise from the disposition of capital assets. Okay? So other transactions resulting in capital gains or losses where there is no sale would be when the stocks or bonds held as capital assets become worthless, capital loss is recognized. When bonds held as capital assets are retired, gains or losses from failure to exercise options, option gains or losses, and when the assets of a corporation are distributed in complete liquidation thereof, liquidating dividend. Capital gain or loss to the shareholder is recognized. redemption of preferred shares, liquidation of partnership, capital gain or loss is recognized to the partner, and gains or losses from short sales. Short selling is selling something one does not own in the future at a particular price in the hope that the property goes down in value. For tax purposes, a short sale is deemed consummated upon delivery of the property to cover the short sale. Okay, so gains on dealings in property would be for ordinary gains, it will be coming from ordinary assets, as we've mentioned, and capital gains would be coming from capital assets. Ordinary gains would be included as part of the regular income or gross income for purposes of computing your income tax due using the regular income tax rate. For capital gains, the general rule is going to be regular income tax, exception if it's under capital gains tax. Okay, so sale and other disposition of domestic stocks directly to buyers will be subject to capital gains tax, and sale of real properties not used in business is also subject to capital gains tax. The scope of capital gains again include sale and other disposition of domestic stocks directly related to buyer is 15% capital gains tax. Yung sale of real property not used in business is 6% capital gains tax. We've already given this in the table that we have presented earlier in the different types of taxpayers, know whether residents or aliens not engaged in trade or business, corporations or foreign corporations. Other capital assets, regular income tax, okay, and general rule. So domestic stocks, preferred stocks, common stocks, stock rights, stock options, stock warrants, unit of participation in any association, recreation, or amusement club. So makikita mo dyan, okay, we have different types of stocks. And by now, hopefully you already understand the concept of stocks because you have already undergone um, corporations, no? Or you already understand what a corporation is, which would normally be under a ownership who holds shares of stocks, or we call them shareholders. Okay. Other disposition of domestic stock, foreclosure of property, pacto de retro sale, sale with buyback agreement, and conditional sale, redemption of shares by issuing corporation. What are not considered other disposition of domestic stocks? Issuance of stocks including treasury stocks, exchange of stocks for services, redemption of shares in mutual fund, worthlessness of stock, redemption of stocks for cancellation by issuing corporation, and gratuitous transfer of stocks or donor stocks. Okay. Mode of gratuitous transfer of stocks is not going to be under capital gains tax but will be subjected to donor tax. Mode of disposing domestic stocks through Philippine Stock Exchange. And this through Philippine Stock Exchange, meaning they are publicly listed companies. If they are not traded in the Philippine Stock Exchange, they are not publicly traded, and therefore yan yung tinatawag nating directly to the buyer, no? So I hope maintindihan natin yan. And tax on sale of domestic stocks through the Philippine Stock Exchange, ito po yung taxation niya. Makikita mo it's lesser, no? Of 1% of selling price, 1/2 of 1% I think is this of selling price other than percentage tax, and regardless of gain or loss, meron siya talaga stock transaction tax. So illustration, okay, illustration natin. Okay, we have a selling price of 4 million. We have a cost of 3.7. Therefore, our gain is 300,000. We have also stock B of 3 million ang benta natin, pero 3.2 million lang ang 3.2 million ang pagbili natin yan. So may lugi tayong 200,000. Our net, okay, our net capital gain is 100,000. So yan yung sinasabi ko, 1/2 of 1%. Total selling price of this is 7 million. So makikita mo dyan, ang stock transaction tax niya, sabi natin dito, It should be 1/2 of 1%. Na-delete yata yung 1/2. So, ito sa illustration natin, total selling price of 7 million is multiplied to 1/2 of 1%. And that's going to be 35,000. So, 1/2 of 1%. Okay, so it's 0.01 divided by 2. Ang ibig sabihin yan, 0.005 ang rate mo. Multiply mo yan sa 7 million. Okay, 35,000. And again, hopefully, while you're attending classes for taxation and other classes in accounting and those that requires calculation, kapag meron po tayong mga illustrations in the screen, I hope you're also holding your calculator so that you can also do your calculations. So anyway, in this scenario, the stock transaction tax is 35,000. That's how you're going to compute it. Tax on sale of domestic stock directly to the buyer is going to be different. As you can see, it's going to be a higher tax rate. If if the transaction involved is less than 100,000, it's going to be 5% tax rate. But if it exceeds 100,000, it's going to be 10% tax rate. For net gain computation, you have the selling price less the basis of shares disposed, okay, less selling expenses will be your net capital gain or loss. Okay. For selling price, we will identify a selling price in the cash sale total consideration received. Partly in money and partly in property would be the sum of money and the fair market value of the property. Okay, in exchange of property, fair market value of property. Okay, so depende kasi sa consideration. If the payment is cash, of course, the total consideration of cash received. Pero kapag partly in money and partly in property, the cash that you receive plus the fair market value of the property. Pero kung exchange lang siya, yung stocks mo in exchange of a property, then we will use as a selling price yung fair market value of the property. The basis of stock, the cost of stock acquired by purchase. If acquired by device, bequest, or inheritance, it's going to be the fair market value at the time of the death, okay, of the decedent, yung nag-bequeath or yung namatay, okay, kung inheritance. If acquired by gift, the fair market value at the time of the gifting or yung pagbigay, no, or giving. If acquired by inadequate consideration, the amount paid. Oops. So illustration, the selling price is 1.5 million. The basis of shares disposed is 1 million, or the cost is going to be 1 million. So therefore, the net capital gain is 500,000. You can see here, the net gain up to 100,000 is multiplied to 5%, and then anything in excess of 100,000, in this case, 400,000 yung excess, di ba? Kasi 500,000. So 500,000 minus the 100,000 na na-tax at 5% is 400,000. So the 400,000 will be subjected to 10%. The total capital gains tax due, therefore, is 45,000 pesos. Okay. Next would be costing procedures of stocks disposed, specific identification method, moving average method, and first in, first out method. So, let's look at some illustrations. Mr. Pungkol sold his investment in domestic stocks directly to the buyer for 500,000. The shares of a fair value of 650 and the 300,000 is the basis of the date of sale. So 650 ang fair value, 300 ang basis, pero ang pagbenta talaga or natanggap na consideration is 500,000. Okay? So let's look at it. Fair value, selling price, the difference is subject to transfer tax. Okay? And then we'll go to the selling price versus the cost or the basis, which will be subject to capital gains tax. Okay? What is transactional tax or transactional capital gains tax? It's paid within 30 days after each sale or disposition. Annual capital gains tax filed on or before the 15th day of the 4th month of the following the close of the taxable year of the taxpayer. Okay? Let's look at this example. Selling price is 210,000, the cost is 110, the capital gains is 110,000. First 100,000 is 5%, so that's 5,000. The excess of 100,000 is 10,000 times 10% is 1,000. Capital gains tax is 6,000. Another illustration, we have the selling price at 210. The cost of the first transaction is 100,000. The capital gains is 110. The capital gains tax is the capital gains tax is 6,000. Kagaya nito, no? And then we have 80K. Ang selling price pero yung cost niya is 90,000. The capital loss is 10,000, no? Negative. So wala ka ngayon. Zero yung capital gains tax niyan. Yung sa May 14, 160,000 yung selling price. The cost is only 70,000. The capital gains is 90,000. Okay, 90,000 times 5%. Your capital gains tax is 4,500. Sir, bakit po 5% ang gamit? Because it's less than 100,000, di ba? 5% lang. Okay. And then for June 17, 80,000 yung selling price and the cost is 100,000. The capital loss is negative 20,000 and therefore wala po siya capital gains tax corresponding to that individually. Total capital gains tax niya is 10,500. Yung 6,045. Yung capital gains niya, total net capital gains is 170,000. Okay. Yeah, 170. 90. So, 200 yung gains niya, yung losses niya is 30. So, 170. Okay. So, let's go to the annual net capital gains tax. Okay, so annual net capital gain is 170,000. Your first 100,000 net gain is 5%, so that's 5,000. Excess of net capital gain of the first 100,000 is 70. So, the 70 will now be multiplied to the 10% rate in excess, diba? So, 7,000 plus 5,000, you will have annual capital gains tax of 12,000. But since transactionally, dito, you will see, transactionally, on each of these transactions, you paid the capital gains tax of 6,000 and 4,500, a total of 10,500. Pagdating sa annual, you will deduct that whatever you paid, so total capital gains tax paid is 10,500. Therefore, you still have only capital gains tax payable of only 1,500. Okay? Installment payment of the 5% to 10% capital gains tax. Okay, if the selling price exceeds 1,000 pesos, initial payment does not exceed 25% of the selling price, you may choose to or opt to have installment payment. So let's have an illustration of installment payment of capital gains tax. On November 3, 2013, Mr. Wong made a sale of domestic stocks costing 700,000 pesos directly to the buyer for 1 million. The buyer agreed to pay in 100,000 pesos monthly installment starting November 30. Okay? So you will see here, okay? Makikita mo yan, yung cost niya is 700,000. Okay? Tapos yung selling price niya is 1 million. Okay? And then yung payment niya initially is only 100,000. Okay? So ibig sabihin utang yung 900,000, no? 1 million yung pagbili niya pero 100,000 lang yung babayaran niya on the spot. Okay. So, kita na natin yan. So, you will see here that the selling price again, as mentioned, will be 1 million. Cost of shares is 700,000. The net capital gain is 300,000. Now, in the computation, you will see the first 100,000 will be 5%. So, that's 5,000. And the excess of 100,000 is 200,000, no? 300 minus 100 is 200,000 times 10%, 20,000 yung capital gains tax due niya. 25,000 yung total. Now, the taxpayer is qualified to pay capital gains in installment because hindi siya nag-exceed ng 25%. Makikita mo yung first installment niya kasi is only 100,000. So, 100,000 over 1 million, that's only 10%, no? So, kung makikita mo dito, collection over contract price times capital gains tax. Okay, so the collection is only 100,000 times over 1 million, so that's 10% times 25,000. You can choose to pay only 2,500 in installment. Every installment, no? Okay, that's for the installment illustration. Okay, there are also special tax rules in capital gain or loss. Wash sales of stocks, tax-free exchanges, exchange of stocks pursuant to merger or consolidation, transfer of stocks resulting in corporate control. Okay, wash sale rule when within 30 days before and 30 days after the sale, also referred to as the 61-day period, the taxpayer acquired or entered into a contract or option to acquire substantially identical securities. It includes stocks and bonds, and substantially identical means the same class with the same features. Capital losses on wash sales by non-dealers of securities, okay, or non-dealers in securities, magkaibang word po yan, hindi po yan insecure ha. In securities are not deductible against capital gains. Okay? Capital losses on wash sales are not deductible from capital gains. And then tax-free exchanges, no gain or loss is recognized under merger or consolidation or acquisition of control. Okay? That's under section 40C2. Okay, note though that control is at least 51% of the voting power. Okay, that's presumptive control. All right? So that's our final income tax topic. Okay? So, that's it for the final income tax. Let me just share to you this verse from Matthew 22:15 to 21. Give back to Caesar what belongs to Caesar and to God what belongs to God. Okay, and they're talking about taxes here. If you were reading your Bible, they were talking about taxes here. That's why I'm sharing that to you. Okay? So, ibig sabihin, mabayad tayo ng taxes natin if we are required to do so. God bless and thank you. Yan po ang ating final income taxes. Questions?